But what doesn't recover is the currency. The currency becomes more and more diluted. So inflation is when you start adding water to the milk. You cheat, and then you add so much water that people notice, whoa, there's no milk anymore. And I think we are near that point. Wednesday, August 16th, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at distractions today, and as it concerns inflation, we had the CPI data for the UK. Yes, the rate of growth of prices as per the CPI slowed down. It came out as expected, but the bond market is not buying into it, not just in the UK, but also in the US. The bond market is not buying the fact that, there's a lot of talk out there that the Fed and the Bank of England as well, to some extent, are reining in inflation, that they're fighting inflation. And that's what we're going to look at today. Before we do, just wanted to show you that Rudy is around, but he wants to stay under the desk. So here you go, Rudy. Say hello to everyone. We've had our walk today. It's a beautiful morning. So yes, I said yesterday in my video that I was going to go play golf, and I did play yesterday. It was a beautiful day as well. Not too much wind. Usually it's very windy out here. But yeah, I had a good game. Could have been better as always, but improving. I've been working a lot on my swing, going to the practice ground a lot. But there's still the consistency part that needs to be worked on. But anyway, back to more important things. And I think the topic of inflation is one of the most important ones because it affects everyone. I'll give you an example. I went on Monday to order new prescription spectacles or glasses. And the last time I bought new ones, they're not new anymore, and they're starting to crack the frame. And I need another one just in case. The last time I bought them was 2019. So 4 years later, the new ones are going to cost me they're going to cost me 40% more than this one, only because I signed up to this deal where I pay about £7 a month to get free tests, and also to get a discount if I buy other things in this opticians. But without entering into this £7 a month deal, it would have been 66% more. So I think that's what we need to focus on, that the cost of living, things that are basic necessities, are actually multiplying in prices. And that all the talk here in the UK and the US that they're conquering inflation is just a load of baloney. And I always go back to Felix Sommery, of course, who said that inflation against government or it is impossible, because it's the government and the central bank and the banking sector that is really like a part of the central banking system that create the inflation. Inflation, of course, is the creation of currency and credit out of thin air, not backed by gold and silver, not backed by any real monetary asset or real money. These days, it's backed by heavy taxation. That's all it's backed by, not anything else. And the other point about inflation is that, unfortunately, the majority never learn. And I think it was Lenin, what's his name? Lord Keynes said that Lenin said that the best way to destroy the bourgeoisie or the middle class was to inflate, and that the process was so insidious and hidden and stealth that not one man in a million noticed it. And I think it's still the case. I know that you, who has been watching me for a long time, knows what inflation is, but still a lot of people think that the CPI is inflation. CPI is just a measure of prices, and even in an inflationary period, you could have prices that drop, but what doesn't recover is the currency. The currency becomes more and more diluted. So inflation is when you start adding water to the milk. You cheat, and then you add so much water that people notice, well, there's no milk anymore. And I think we are near that point. That's what inflation is all about. How can we defeat inflation on a personal basis? It's very difficult. I couldn't defeat the inflation. The currency that I use is gone down against spectacles, right? Well, I think the way to defeat it is to know what it is and to know what the government is up to. And if you are fortunate enough to be able to build up savings, yeah, make sure that you have some gold and silver in place. The quantity depends on the individual. And aside from being a good store value, gold and silver is a good insurance against turmoil in the system, in the banking sector. If you keep your savings in the bank, it might not be there. A lot of you probably remember iSave. Back in 2010 or 11, I think it was one of the Icelandic banks here in the UK. It went bust. Yes, they were lucky, the depositors there, because Gordon Brown bailed them out with our taxpayer money. But next time it might not happen. So that's why I think it's important to have a little bit of gold and silver, and that's why many of you have asked, of course, where to get gold and silver. And my affiliates are below in the description. In North America, I've got ITM Trading and Miles Franklin. In the UK, I've got Gold Investments. So if you're thinking about it and haven't pulled the trigger, I think this is a very good time, seeing that gold and silver have been a little bit in the doldrums in terms of fiat currency. But if you look back to 2000s, gold is up more than 9% on average in British pounds, and also in dollars, not so much as the British pound. And talking about gold and silver, I wanted to show you one of my favorite items from an age where we had, or our great-grandparents had, real money. And it's a sterling silver sovereign purse. So there you go. So how does that work? Well, you could put your chain around here and have it in your suit jacket, and then when it clicks, and then you push it here and it opens. So you've got a sovereign here and a half sovereign there. You can put more if you want as well. So that's how our forebears or great-grandparents, or it's maybe, yeah, that's how they used to carry real money around, a proper wallet or purse. Back to the CPI, or what people call inflation, and that's the big part of the trick. They'll trick the public into thinking that everything's fine, that they've solved the problem. The chancellor and the government have been saying that they're going to have inflation, and that couldn't be further from the truth. If you look at the classical sense, they're not going to have the rate of growth of currency and supply. They're not going to stop government deficit spending, which we still have record amounts. I think back in May, the budget deficit for the UK was the highest, second highest on record for since they've been measuring it. So it's not going to stop, but if we get to this mythical 5%, which would be having, well, yeah, having from around 10, 11% by the end of the year, they're going to come out and say they defeated inflation, they've done what they told you, but your cost of living is still going to go up. And I remember well, because the Germans, of course, they've been more aware of inflation because they've had two currency collapses in the last 100 years, one in 1923, one after World War II as well. And working in the markets and following bond markets, I remember when the German inflation data used to come out, it wasn't called CPI. It was called the cost of living data. And that's what you need to keep in mind. Your cost of living is still going to go up. These data don't mean much at all. And even if they get to 2%, your currency will never buy what it could 5, 10, 15, 20 years ago. And it will not buy what it buys today in 5, 10, 15 years from now. And that's how it's going to be because it's a fiat currency. And don't let them fool you into thinking that they've got inflation under control. So what were the numbers then? Well, the CPI dropped from, the rate of growth of CPI dropped from 7.9 to 6.8. It came out as expected. And I did a video as well back in May 2022 talking about how the Office of National Statistics, they've changed the data. So this number is about 1% less than it should be. They changed the whole data since 1949, I think. So this is not even a real number. It's not really the same number as we had in the beginning of last year. And there is, of course, the retail price index, the RPI, which is a much better indication of the average household's rising cost of living. And that came out at 9%. And historically, that had been about 1 to 1.5% more than the CPI. So now you can see that it's about 2.2% more. And why is that? Well, because the CPI has been tinkered with. So there's that as well. So what about the bond market? Are they buying into this? And that's the thing. You hear, all you hear today on the radio, and I haven't listened to the radio. I did listen to LBC yesterday while driving to play golf. But I bet you they're going to bring out maybe Jeremy Hunt. He's going to be all, oh yeah, look, inflation is dropping. But the bond market isn't buying it, as I said. So where are the bond yields? Well, let's start with the UK gilts. Of course, we were talking about UK CPI and inflation. Well, we're above 5%. We're at 5.13. And I noticed that yesterday we got up to almost 5.2. And recently we had been below 5%. And I've seen headlines that mortgage lenders are going to cut their rates because they think the Bank of England has gotten inflation under control. And I think they will be wrong. And yes, another rate that people need to keep an eye on is the 30-year gilt yield. Well, that's approaching 5%. It's up 7 basis points today at 484. I think the high last year was around 520. And that will, if we go back above that 520, it will show that the markets are losing faith and confidence in the Bank of England. So that's what's going on in terms of CPI, inflation, the cost of living. And there's some anecdotal evidence as well before we go into the markets I wanted to talk about. I saw this article 3 days ago in the FT. Pawnbroking demand hits record levels in UK. Increased usage down to high inflation and shortages of alternatives, says chief of Britain's biggest operator. So, yeah, so much for the cost of living coming down, right? And there's also this here. Risk of double mortgage shock as that's the Bank of England, warns over persistently high interest rates. So Bank of England was forecasting, they have these forecasts they make, these projections, which are baloney, right? they're trying to get Ben Bernanke to help them out, but I'm sure it's going to even get worse if Ben Bernanke gets close to the Bank of England. A year ago or so, they were saying that rates are going to top at 4, but now they're saying that rates might stay at 5 or even 6 up until 2026, and I think it's going to be even worse. And what that's going to do to people's mortgages is quite significant, because about half of 1.68 million households, they've remortgaged in the last year, and they went from having rates of around 1.5% to 2% for a 2-year fixed to 4%. But now their mortgages, the 2-year mortgages, are gonna come due in 2025. And the rate is going to be even higher. When they did that last year, and in the beginning of this year, they got the impression, because the experts at the Bank of England and the city economists were saying, oh, and it's going to top at 4%, and then we're going to go back to 2% inflation target. Rates are going to go down. So they remortgaged just for 2 years. So they're probably going to have a shock. And I would say even the people who remortgage for 5 years, this is not gonna, the Bank of England is in denial really of about inflation, because they can't admit that they're the ones who created the inflation with £500 billion of QE back in 2020-21 and cutting rates to 0 and leaving them there for a long time. And the Treasury under Rishi Sunak obliged as well by borrowing that 500 trillion. Well, they scratch each other's back and paying people to do nothing, shutting the economy down for 240 days, putting people under house arrest or lockdown, if you want to call it. So that's what's going on. And yes, I'm sorry not to have better news, but hopefully you will know what's going on. You don't have to agree with me, but that's another story. So it's 8:38 a.m. London time, so we're going to quickly look at the markets. So we've got spot gold at 1903. So why have gold and silver languished? Well, I think it's because the bond markets are dropping and yields are rising. But if you look at the 10-year yield, it bottomed at 0.3 in 2020 during that crash in the spring of 2020. And gold was around 1450 at the time. So it doesn't really, it doesn't really, how can I say, correspond that rising bond yields are going to be negative for precious metals. But right now, there's a bit of headwinds. And knowing what you know, hopefully, about inflation and the fact that your currency, not just here in the UK, but everywhere else, is not going to be worth as much in 5, 10, 15 years' time, I think it's still the place to be. So the high overnight has been 1906.76 and the low has been 1900. Silver, on the other hand, seems to be outperforming slightly. It's up 12 cents or 0.5% at 22.64. High's been 68, low's 47. To the index futures, the Dow is up 66, NASDAQ 100 up 40, S&P up just under 9 points. To the currencies, sterling is up 0.25%, 127.36. The euro is up 0.2 at 109.22. The dollar is down slightly versus the yen, but still very strong. It's at 145.50. And the dollar is down 0.2 versus the yuan at 731. Aussie dollar is up 0.25% at 64.70. The dollar is down slightly versus the Canadian dollar, 134.86. And the Kiwi dollar is up 0.5% at 59.82. And we'll move on to the commodities market. We got WTI crude unchanged at 80.66. Brent is unchanged as well, 84.66. Platinum is trading at 895. It's up $3. High grade copper is up 0.25% at 370. Let's check the bond markets. We checked the gilt market already, of course. The 10-year US 10-year yield is at just below 420. The high overnight has been 422. The key level, in my opinion, is going to be 433. That's one to watch. And the 2 years at 492 is down about 4 basis points. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.